So, well, thank you, Gary. I'm pleased to be joined by Gary Kirt, a recently inductee of the Minnesota Bankers Association's Pioneer Banking Club. And this membership denotes a Minnesota banker who has been a leader in the industry for 50 years or more. So, well, congratulations on a good, long, successful career in the banking industry. And
thanks so much, Brian. It's been a very good run.
Yeah. Well, why don't we start out by, if you could fill in our listeners and our readers just on how it all started for you and how you got interested in this as in banking as a career.
Sure. I was when I was in high school, I did a lot of buying and selling and fixing of cars. And that actually evolved into buying some houses while I was in high school. And just after I graduated, I went to sell one of the houses, and I had kind of expected I'd go into real estate as a real estate agent because I'm very interested in real estate. I sold a house and went to the closing, and at the closing table, the lender asked me to sign an affidavit that I was legal age, and I was only 18, so we couldn't actually close on the property because I couldn't pass title, and the sale kind of died right there at the table. So kind of at that point, I decided if I'm going to be in the real estate world, I'd much rather be on the lending side and possibly get people more prepared for what's to come from a lender's perspective. That lender back the IDS mortgage, which is long gone, of course. But that's what pretty much I decided right then and there that it was mortgage banking that I'd like to get into, or some type of real estate finance. It was kind of hard in 1970 to get an interview without any college at all, but eventually I worked and was able to get a job as a loan officer trainee at a company called Conservative Mortgage Company. Mm-hmm. Kind of a unique name for back then. They're more concerned about a reputation to the secondary market, and conservative denoted good, solid writing. Nowadays, the real estate industry would not be too interested in working with a company called Conservative, I'm sure. So that's basically what converted me from the idea of becoming a real estate agent to getting into the mortgage finance arena.
Okay. And I understand you purchased Bell Mortgage in 1980. Is that right?
Yes, that's correct. I was with Conservative for 10 years. And kind of a mentor of mine, Ken Rothschild, who was second generation mortgage banker in St. Paul, that had Rothschild Financial Company. I know Ken, and Ken called me and indicated he had just purchased what was then called the David C. Bell Investment Company. And he purchased it primarily to acquire the servicing portfolio of the loans that they had acquired, but had no interest in the retail platform, which because he already had a large retail mortgage banking firm. So I bought the name and the licenses and everything that the old David C. Bell Investment Company had in 1980. Recruited some loan officers I'd worked with over the years, and a really good support staff, and that's kind of the way we started. We shortened the name to Bell Mortgage from David C. Bell Investment Company, pretty much in his 100th birthday. It was founded in 1880, and we purchased it in 1980.
Wow. Well, tell us a little bit about the growth of the company and kind of the growth trajectory from 1980 to where you are today with the
Sure. Well, and as I was looking into the real estate industry, I learned the first three rules about real estate is location, location, location. Certainly to build a company, it didn't take me long to learn the first three rules are people, people, people. So we really went and looked for the highest standard of people that wanted to embrace kind of a new way of doing mortgage lending. We were somewhat of a disruptor back then because we were kind of had a blank canvas as to how the real estate community might be better served. So we actually went out into the real estate community, talked with realtors and builders, and asked them to refer their buyers to us. And rather than waiting, most realtors would bring their client to a bank or a savings and loan. And it was kind of inconvenient for the borrowers. Many of them had to take time off of work. Our loan officers and myself, we would take loan applications on the weekends. We would do it at lunch hour at their place of work. So we really added a convenience factor And another thing that kind of made Bell a disruptor back then is we weren't in business to establish a large servicing portfolio. We were in business to generate great, really good service to the industry and generate fee income up front by selling the servicing. So we kind of patterned our business model after the insurance industry. I mean, insurance brokers have been around for a long time, a lot longer than mortgage brokers. But mortgage brokerage was pretty much pioneered in the early 1980s, and Bell was really at the front side of it. The revenue that we're able to generate up front allowed us to hire and retain some really good salespeople. Our industry evolved much like the real estate industry, where our salespeople were pretty much on straight commission. And if you're really good at what you do, you do really well. And by selling the servicing and generating the fees and the income necessary to pay the top salespeople. And we just kept building and building. You know, it's amazing how fast time goes. But we just, I say I've been in the business for 50 years, but actually that's 600 end of the months. Our whole world is the end of the month. It's kind of Super Bowl for our entire mortgage team at the end of each month.
Mm-hmm. Well, how many offices do you have, and what locations do you serve in the?
Well, yes. Prior to my sale of the company to State Bank and Trust out of Fargo, we would probably had about 22, 24 offices between Minnesota and Phoenix, Arizona. Now, since State Bank purchased Bell, and I've stayed on in a consulting role, but I'll be getting that up this year. Gosh, I can't even count the number of offices in a number of states. But we're rapidly through the bank channel now. We're now owned by what's referred to now as Bell Bank, and got a great, ambitious goal of expanding the mortgage banking platform. State Bank found that by acquiring Bell Mortgage in 2011, basically, they acquired 150 salespeople that really had big networks that had been working in the business community here for many, many years, and it really helped build the bank more rapid than it might have by just coming into the marketplace.
Well, a lot has changed since 1980. Certainly, when you purchased Bell Mortgage, it was a whole different market then, wasn't it? What are some of the things that you can touch on as far as the?
Well, it wasn't brilliant timing because rates peaked at about almost 18% in 1981. It was just an incredibly difficult time period in all lending, and certainly real estate community as well as home buyers. The negative amortization mortgages were created back then that obviously didn't work out real well for the consumer or for the lenders, but we were trying desperately to find some affordable house payments that people could make in 80, 81, 82, 83, in that range. But that really helped us build and create the mortgage brokerage channel, because products were very, very difficult to bring to the Minnesota marketplace. The local savings and loans, the local federally chartered banks, you know, they had what they would put in the portfolio, but the secondary market wasn't nearly as established as it is today. So a company like Bell was able to make arrangements with lenders that weren't currently in Minnesota that wanted to acquire the servicing in Minnesota, and then allow us to offer their products, which almost all of them were some type of an adjustable rate to get the early payments relatively lower. But that was probably the baptism under fire for sure, with the rates that high. But we listened to the real estate community. We kept trying to bring products to them that made sense, and we all got through it. But rates stayed above 10% for quite a few years. And now, of course, the last 10, 12 years, they've been under 5.
Well, we talk an awful lot about the affordable housing challenge here nowadays, and that certainly is a big issue. But when you think back to then, when you had the double-digit mortgage rates and so on, that was quite a challenge too, wasn't it?
Yeah, for sure. And it just took some creative approaches to it. Of course, it slowed the real estate community down, the industry down, and the new construction industry down dramatically. But people, just like the subprime meltdown, if you will, we all got through it and got smarter and wiser, and listened to our customers more and more, and kept trying to create products that met their needs then and now.
Mhm. What was that subprime meltdown like for you back in, because that was before you sold to the
State Bank and Trust in Fargo.
right? Mm-hmm.
It was a challenge for us because we always consider ourselves a real ethical boutique lender that was just all about customer and service. We didn't feel many of those products were really consumer friendly. The biggest difficulty we had during the subprime era is keeping our salespeople, because we didn't offer most of the products that most and many lenders did. And it was real hard when their real estate referral sources said, come on, we've got to have a stated income. We've got to have something that allows this and allows that. And it kind of went contrary to underwriting standards for so many years. So we avoided it to a great extent. We didn't get hurt by it. We certainly did some versions of it as aggressive as we felt was responsible. But we were pretty happy that we made it through. What's kind of an interesting and a successful thing that we look at is when we got into the mortgage banking and ownership in 1980, there's not one company left from 1980 that's a non-bank. So Bell is the only name that is still out in the marketplace. And the subprime era took an awful lot of lenders nationally and local out of the business.
It just seems like the big players are out there now, the Wells Fargos and so on. It just seems like they're dominant now. And was it always that way?
Funny you bring that up, because yes, and that was part of the challenge and part of the fun, being somewhat nimble, and it was certainly small relative to any of those kinds of companies. It was always fun competing with them. They would always have a void in their product line or in their level of service. Didn't have the same personal touch. Didn't have the same salespeople. I don't want to be disrespectful, but to some extent, the banks that were back then were somewhat of an order taker, that if you came into the bank, we would take care of you. Well, we had straight commission, hardworking salespeople out doing seminars for home buyers, working with real estate community and educating clients. We rolled our sleeves up as an industry, speaking about the mortgage brokerage industry at that time. And Bell competed very favorably. And we turned around and sell loans to Wells. Back then it was Wells Banco, and it was Northwestern National Bank, and way back it was Iowa Securities. Mm-hmm. Mm-hmm. So and we would sell to U.S. Bank, we would sell to Wells Fargo as well.
Okay. Well, great. Well, where do you see the future of this industry going now? What's your outlook?
Well, the outlook is there's a lot of entrepreneurial spirits and hardworking folks that are trying to solve affordable housing as well as the housing finance in general. Mm-hmm. Obviously, these are uncharted times, but they were in 80, and they were. So we'll get through these times as well. Take good care of our employees, take good care of our customers, listen. It's like everything else in the world right now, we just all got to listen a little bit more. Mm-hmm. And if we truly listen to our customers, our customers are our employees, as well as the real estate and building community and the home buyers themselves. So we'll get through it and do a good job.
Mm-hmm. Mm-hmm. So you're still a consultant for State Bank and Trust? Is that?
For the balance of this year, the straight commission salespeople are a different breed, if you will, for a bank. So it's taken some time for them to get the concept of what makes salespeople tick on that level. It was kind of unusual in a banking environment. So I've been consulting with the salespeople and kind of a liaison between bank management and salespeople. But it's we had a great succession plan in place. We've got good young leaders that are out there with tons of energy, and the bank is growing by leaps and bounds, and the mortgage company is very, very successful. And its customer service has not suffered at all.
Okay. So what, are you from the Twin Cities area? What's your, did you,
I'm from a small town in northern Minnesota called Bena, South Shore of Lake
okay.
Winnebagoche.
Mhm.
Not many people are from Bena because it's pretty small,
Yeah.
and lived in Little Falls for a number of years.
Mhm.
Moved to the Twin Cities, I think it was probably 67, 66, 67,
Okay.
and went to school here in town and decided to go right into the workforce as opposed to go the college route.
Mhm. Mhm. Well, what have you been up to now in retirement? I understand you do a lot of volunteer work.
Well, we always have. It's always been a core value of Bell and all the people that work with us at Bell, giving back to our community. We pretty much really adopted a group called Simpson Housing Services. They advocate for people experiencing homelessness. We're in the housing business, seemed like a natural. We've been working with them for 30, 32 years from the day they opened the first shelter.
Mhm.
And that's been a marvelous relationship and partnership. And Bell continues to this day, and my wife Karen and I continue to this day being involved with Simpson. When I first moved to the Twin Cities, I found the Boys and Girls Club, which was really important to me at that time. And so I was a club kid for years, and went on the board in 1980, and I was on the board for about 30 years of the Boys and Girls Club as well, and continue to do some work in the Boys and Girls Club arena. We've got 11 grandchildren scattered about. So between Minneapolis and Bozeman, Montana, and we do a little traveling, little real estate investing in Montana.
Mhm.
So we're in a very good chapter.
Great, great. Well, I wish you well in your retirement and in all your endeavors. And so, and thanks for joining us today. Really, really fun chatting with you.
My pleasure. Thank you so much.
Thanks, Carrie. Take
Yep.
care.
You as well. Bye-bye.